Hello everyone, my name is Clay and we are Clay's Financials. Together with my colleagues Denise, Leo, Ace, and Kevin, we will be discussing effective AR policy and procedures. Hello everyone, my name is Clay and we are Clay's Financials. Together with my colleagues Denise, Leo, Ace, and Kevin, we will be discussing effective AR policy and procedures. To begin with, I'd like to provide a brief background on our selected company. PITC Pharma, renamed itself as the Philippine Pharma Procurement Inc. or PPPI, is a government pharmaceutical procurement corporation or organization providing access to affordable and quality essential medicines to improve the health conditions of Filipinos. Given that the nature of the business is procurement, it is very important for the company to have an effective accounts receivable management. Accounts receivable management generally consists of two things. Number one, setting the credit policy. And number two is monitoring the receivable balance. There are three components of credit policy. Number one, credit standards. Meaning what criteria will we implement to enable the customer to be granted credit. Next, we have credit terms, which states how long credit should be allowed. So basically, it also should include discounts whenever they shall be granted. And then we also have collection policy, meaning how the collection should happen and how are we going to incorporate to motivate payment from the customer. So these three components are very important when we talk about setting the credit policy. The second component of accounts receivable management is monitoring the AR balance. How? This is by calculating the days sales outstanding or the DSO. It is the period from sales until collection, meaning how long will it take to collect the AR balance. DSO is an average number of days. It doesn't tell how long an individual account has been outstanding. Hence, we can add another way to monitor, such as preparing an aging schedule. Aging schedule tells us how long an individual account has been due and when it is past due. Through the use of these monitoring techniques, we would be able to see whether policies are being implemented. To provide a good foundation, allow me to give some best practices for accounts receivable management. Number one, use electronic billing and statement to minimize human error. Next, outline clear billing procedures. You have to document the process. Next is set credit and collection policies and stick to them to avoid extending too much credit to some clients and make it easy for everyone or anyone in the business to determine whether to extend credit when the client requests for it. Next, you have to be proactive. Of course, you also have to set up automations using AR management softwares. Next, make it easy for customers. You need to have a quick and convenient payment method. Next, use the right KPIs. AR performance metrics should be utilized to ensure the process is functioning properly. And then finally, involve all teams in the process. It's important to have clear segregation of duties for each department concerned in order to ensure accountability for every transaction. Now, to further illustrate how this works in a company, let me turn you over to my colleagues to discuss PITC Pharma's accounts receivable management policies and procedures. Let's begin with Kevin.
Thank you, Clayso. I will now discuss the segregation of duties and terms for PITC Pharma. Start with the segregation of duties. The accounting department is responsible for the recording, reporting, and analysis of receivables and collections. The sales group's duties are the account management, collection, status monitoring, and analysis of each trade receivable. The treasury department is in charge of periodically releasing SOA and collection letters to clients, sending notice of dishonor, and referring accounts to the legal department whenever necessary. Lastly, the legal affairs is responsible for sending out demand letters referred by finance and providing legal advice and service on accounts receivable collection. Next, we'll discuss the terms for this presentation. Accounts receivable trade. This is the amount of collectible from a customer arising from a sale. Allowance for doubtful accounts. This is a contra asset account which represents provisions for possible losses from non-collection of receivables. The company uses allowance method. Collection receipts. This is evidence of receipt of payment or collection of sales. Next is notice of dishonor. Evidencing refusal by the drawee bank to accept or pay a check. Official receipt. This is evidence of receipt of payment for disbursement. Past due or delinquent receivables. Receivables which payment has not been received on the due date. Recoveries on accounts written off. These are collections previously written off from PPI's records. Lastly, write-off. Removal of account deemed uncollectible from the customer. Debt is still owed to the company, but it is no longer reported on the books as a receivable. For the next part of the presentation, I'll now turn you over to Denise. Thank you.
As to accounting and financial management system requirements, PPI has adequate systems to account for, properly record, and manage its receivables. The accounting department maintains an accurate record of receivable transactions. There's a subsidiary ledger for different receivables account, a sales journal to record all AR trades, a check disbursement book for check disbursements, and a cash receipts journal to record all receipts of payment. Monthly aging of AR is provided together with management reports. AR aging schedule is classified into 4 and is aged as follows: current, 1 to 30 days overdue, 31 to 60 days outstanding, and so on. The age shall be based on the date the client's actual receipt of the item, supported by necessary documents. The submission of the aging schedule shall not exceed 5 days after the completion of the monthly financial statements to give them ample time to reconcile the total amount against the general ledger balance. At the end of the year, the management should establish an allowance for doubtful accounts to reflect the amount of receivables estimated to be uncollectible. The establishment of this ensures that the company's receivables are not overstated for financial reporting purposes. Allowance for bad debts is charged against operating income. On your screen is the basis for the provision for doubtful accounts. Accounts forwarded to the legal department and are outstanding for 3 years and above are 100% uncollectible. Those outstanding for 2 years to less than 3 years are 50% uncollectible, and outstanding for 1 year to less than 2 years are 25% uncollectible. Write-offs, on the other hand, are based on COA-issued guidelines. Accounts written off remain as debt until discharged by the legal department or are collected. The legal department can only discharge once the debtor is insolvent. For recoveries, all recoveries shall be recorded by reversing the entry made to write off the account except uncollectible accounts charged to bad debts expense, which should be recorded as miscellaneous income. On your screen is the credit period granted to all clients of PPI, whereas private retailers are granted 7 days credit term, retailers part of the top 1,000 corporations of the world are given 30 days, and transactions with the government have 60 days credit term. Turning you over to Ace for billing, analysis, and collection.
Hi everyone, I'm going to discuss the example of guidelines specific with PITC in terms of billing and collection. First, it was stated that the company shall apply prompt billing. Of course, this is to have an effective management of receivables. There are a few departments with different responsibilities for billing. We have the distribution team, which prepares and issues the sales invoice. We also have the sales group, which is responsible primarily with the collection. This is with the assistance of the Treasury Department. It was also stated that all checks shall be made payable to PITC Pharma. There were also guidelines for aging and analysis. Adequate information concerning the age of outstanding invoices for proper overall control of accounts is essential. Aging should be consistent and collection costs should not exceed expected revenue. Another section of the policies and procedures about the past due accounts collection. As shown in the table here, the responsible group and the procedure varies based on the age of the account. So for example, if the account is already 31 to 60 days past due, the responsible group is SSAD or sales, and they need to make a phone contact to follow up the payment. for 61 to 120 days past due, it is now the Treasury's responsibility, and their action is to mail the past due letter and also to make a phone contact. For 120 days and above, the responsible group now is the Treasury, and they also need to mail the past due, including notification of penalty charges on the past due account. There are further possible actions to aggressively collect accounts receivable. If cleared by both OGCC and COA, PITC shall contract with collection agencies to collect past due accounts. A more aggressive procedure includes garnishment, liens, and judgments, and offset from PPPI's liabilities to the client.
Thank you, Ace. My name is Leo. I'm going to be discussing with you the second to the last part of this report on AR management. I'm going to be discussing the procedures. After what has been discussed by Clay, Kevin, Denise, and Ace, we're going to be tackling about what's getting done on the ground. Who does what? Let's begin with the first part of the procedures, the recording of receivables. We see that the accounting clerk begins the process by receiving the documents and matching the items and the figures. Then the receivables accountant records and files the transactions. The supervisor reviews the updated aging schedule to check if it's in order. And then the VP Finance validates the aging schedule from the supervisor. Lastly, the receivables accountant at year end uses the aging schedule to compute for the allowance and provide the journal entry to record an allowance if ever it's a positive figure. Let's go to the next. The next procedure is a granting of credit terms. We start this procedure with the SSAD processor. The SSAD processor forwards the sales order, the SO, to both the finance clerk and the receivables accountant. The finance clerk checks the aging AR schedule for overdue accounts. That's the one thing we check. The next is the receivables accountant checks for the amount and writes the initial. And then the liability accountant checks for the presence of cash bonds. And if yes, they write the amount and initial. Lastly, on this part, the cashier also checks for the surety bonds and writes the amount and insurer, if any, and initial, forwarding this to the VP of Finance. So far, we've been checking for overdue accounts, amounts, cash bonds, and surety bonds. Why are we doing this? As you can see in the last part, or the bottom part of the slide, we see that the cashier, the liability accountant, and the VP for Finance have this kind of if-else situation. So if with overdue account, with no cash bond, no surety bond, we deny the grant of credit. If with no overdue account, but no cash bond, no surety bond, we still deny the grant of credit. If with no overdue account, but with cash or surety bond, we grant credit up to the extent of the bond. And if with no overdue account and with clean credit line, we grant credit up to the extent of the order of the person. So that's the second procedure of granting credit terms. Let's go to the next. The third procedure we're going to be talking about is billing. For billing, we have 4 key roles. First, the accountants. The accountants review vouchers and or subsidiary ledgers for receivable entries not covered by SI, sales invoices. They will also prepare debit memos if applicable. The next one, the accounting manager. The accounting manager verifies the debit memo for accuracy, and if in order, will sign as approving authority. If not in order, they will forward this to the VP of Finance. If the VP of Finance is the approving authority, and if it's in order, they will approve the debit memo. And lastly, the accountants concerned. They will forward this to the original employees concerned or the supervising managers concerned and will file a tracer copy of this request. That's the third procedure. Let's go to the next one, probably the last procedure we're going to be discussing. The last procedure we're going to be tackling is going to be 2 parts. It's going to be the collection of current accounts and the collection of overdue accounts. For the collection of current accounts, we begin with the distribution processor, which forwards the pink copies of sales invoices. Then the SSAD, the one we mentioned a while ago, files this pink copy for reference purposes and provides the AO with a copy, the account officers. Both the SSAD and the AO calls the client to remind them of the due date and to follow up their payment, reminding the client to prepare withholding tax certificates as well, if applicable. And then the SSAD, if payment is already available, they provide the AO with provisional receipt or collection receipt and collection form. And if not, they go back to the previous step. They still call the client, they remind them of the due date, and then follow up for payments. If the payments are good, the AO, the account officers, collect the payment, issue CORs, and secure withholding tax certificates, if applicable. That's for current accounts. Let's go to overdue accounts. For overdue accounts, we begin with accounting to provide the SSAD with the aging schedule. The SSAD then analyzes the schedule and reviews overdue accounts and reconciles it with the AOs, remember, the account officers. All concerned, in this case, if the account is more than 30 days overdue, check if it's already referred to the legal affairs and the case has been filed to the Office of Government Counsel. If that's the case, stop. If it's not yet filed to that office, the SSAD and the AO will call to the client to follow up payment and remind them to prepare withholding tax certificates if applicable. And then the SSAD, if the payment is available, they will provide the account officer, the AO, with a provisional receipt or collection receipt with collection form. And if not, we go back to the previous step. We still call, remind them to do their payment already. If the payment has already been done and it's already been collected, the account officers collect the payment, they issue the CORs, and secure withholding tax certificates if applicable. And this actually caps all the procedures for the AR management for this particular company. We've tackled from the granting of credit, from billing, from collection. And I'm pretty sure with all that has been discussed by my previous teammates, you've had this kind of like a pretty good background or gist of how AR management really works on the ground with all these procedures. Let's proceed to the conclusion. If there's one thing that I wish for you to take away from this whole presentation, it's that accounts receivables management can make or break a business. That is why it's very important, significant, and it's paramount for any business to have effective AR management policies. Today, we discussed Philippine Pharma Procurement Incorporated or PPPI's AR management policies, and we can definitely see how robust it needs to be for this company to propel even further. It just proves that accounts receivables is the lifeblood of a business's cash flow. It helps with cash flow management by telling you which clients owe you money and how much. This lets you discern whether your cash account accurately reflects your current accounts. Does it? Does it reflect your current financial standing? In other words, accounts receivables makes the difference between worrying that you don't have enough money and staying calm in the knowledge that money will come soon. This is why it's very important. It's kind of like what gears you up for the future and your investments and your consumers and your customers. And having an AR management policy that's efficient and effective will just gear your arsenal to make your business go to the next level. And once again, accounts receivables management can make or break your business. So invest in it and make sure that you make a profitable one. Thank you for listening to our presentation and see you on the next. Bye-bye.